Look at this market. It just keeps going up nonstop, relentless. So let's talk about the 3 reasons why it keeps going up and why this bull market is going to continue. Now, the first reason why, and actually this isn't the first reason, it's just a bonus reason, but oftentimes when the market is rising like this, it just keeps rising. Your number one indicator of where the market is going to go is price action itself. Sounds simple, sounds stupid, but it's true. If you read interviews with any of the top hedge fund manager market wizards like Stan Druckenmiller or PTJ, they always talk about how they do all this analysis about macro and fundamentals and all these different things, but at the end of the day, they just end up relying on price action because all their analysis could be very wrong, but what is never wrong is where price is moving. If it's moving up, it's moving up. I think PTJ said that at the end of the day, he's a slave to the tape, meaning he's a slave to looking at the charts and price action. So no matter what your analysis is telling you or what you think's going to happen, you cannot fight this tape right here. If it's going up, it's going up. Don't try and short or anything like that. Just ride the trend. You're never smarter than the market. That's one thing you always got to remember. And this price action has been phenomenal if you've been in equities like I have with the NASDAQ All-Stars. Oh yeah, it's finally open again. I know it's been so long since I've even offered this. And if you haven't heard me talk about it before, this is our equity trading strategy, all based off momentum. So this is a system I use to trade a majority of my money. Now it's only open for enrollment until this Sunday at midnight. So if you're interested in taking advantage of this crazy bull market, then make sure you check it out before that. But okay, back to the 3 reasons why this bull market is going to continue. And to help us with this video, we got Alex at Macro Ops, which is our global macro research and consulting firm. So he says there's 3 drivers behind this bull market, which has been raging on since mid-year. The first driver is that all these big fund managers had to reposition. So back in December of last year, so almost exactly a year ago, you see what the price action was like. Things were looking pretty bad. And if you're trading back then you remember just how rough this was. Now, because of that and other reasons, just these fund managers are bearish in general, they just became super bearish, which was fine, based on what was happening. Okay, you could be bearish, but the issue became that they held on to those views even as the market improved. So you saw in the beginning of this year, things rallied back pretty nicely. And yeah, this year we had some rough patches, but overall we're up a lot higher if you consider where we started from. But the issue was that these guys got so bearish that they were thinking that 2008 was going to happen again. So they kept all their money on the sidelines. They're too scared. But by mid-year that started to change and they realized, okay, maybe we're wrong. We need to put our money in the market. But you got to think about it. It's a lot of money. So it takes a lot of time to change your positioning. So if you're all cash and defensive with billions of dollars, it's going to take a while to become bullish again with all your assets. So part of the reason we've seen these stock prices continue to go up like this is because of all those managers finally investing back in the market. Now, of course, eventually they'll end up investing too much and then they get out over their skis and then the market will turn again, but that's not happening yet. We're still in the stage where they're trying to put all their money in, which is great for a bull market because they're buying and that's pushing stocks higher that we own. It's nice. Now, the second reason we're getting this big rally is because of the Fed. They've basically said that they're not going to do any rate hikes in 2020. It's all pushed off to 2021 at the earliest. And they've also raised the bar for action. So they got to see a lot more data to either hike or cut rates again. So they don't want to do anything. They want to keep rates where they're at. And at this point, when rates are this low, it's tough to have a recession. Because again, the whole idea with the Fed and how it affects the market is that they control liquidity. And liquidity is just how much money is in the economy, in the marketplace. If interest rates are low, that means a lot of people can borrow money more easily, businesses can borrow, and everyone can spend that money. It's easy financial conditions. And that's good because when they have all that money, what are they going to do? They're going to buy up stuff like stocks, other assets too, but that's part of why you'll see stock prices rise. So everyone's real happy when the Fed is not hiking and they feel good about buying more, which again, that pushes stocks higher. And there's a good chance that we get some good returns in 2020 as well because they're not going to do anything until 2021. Another year of easy conditions. So it makes sense to get long and soak it up. Now, the third reason this rally is happening is because of the temporary trade truce. So this US-China trade war, it's not over. It's going to go on for years. And their phase 1 deal is not actually significant, whatever Trump put together. But his idea is, sideline this stuff for the election so that there's no market volatility so he looks better, When people are happy with the market, there's a better chance of him getting reelected. He doesn't want to escalate this trade war at this point. But if he gets reelected, I'm sure he's going to go back at it with China, as he should, in my opinion, because I'm kind of anti-China, or the CCP at least. Not saying that he's doing it in the best way, but China does need to be put in check by not just the US, but the world in general. But anyway, anyway, for now, less China stuff is good for the market. Now, another thing to consider here is sentiment. And remember how we gauge sentiment. It's an inverse relationship. When people are super happy in investing, that usually marks the end of a bull market. And when people are super pessimistic and not investing, that means there's a lot left to go. So right now, after this strong run, you would think that people finally cave. They're going to be like, okay, this market, this bull is real. Let me put my money in. That's typically what happens. But if you look at these charts right here, and you'll see in all these sentiment charts, the black line is the S&P 500, and then the line below is the various sentiment indicators. I'm not going to go through each one, but you can see where the little red dots are. They are low compared to historical highs. So that means people aren't super euphoric or anything. They're not really bullish. They're not overexposed. None of that is happening yet, which is very good for the bull market because that means there's more people that are wrongly positioned, just like those fund managers that still have to put their money in. It is great to have some negative bears when the bull market is raging on, because that means there's more money to come in. If everybody's just like, yeah, this bull market is awesome, it's going to last forever, let's make a bunch of money, that's the signal that things might turn around, because then everybody has their money in and there's no more money to go in and push prices higher. But based off these charts, you could see that sentiment level hasn't hit those extremes yet. And part of the reason why is because it hasn't been a super easy market. Like, you can go back and see what happened at the end of last year. That hurt people's sentiment for sure. They were scared after that. And then we did have some big bouts of volatility in between this year. So yeah, it won't be the easiest market to make money in because you might get knocked out a bit. But overall, it actually might be great because that will extend the bull market. If it was super easy just going higher and higher and everyone was just buying the dip and feeling great, well, then you might get that sentiment overload where people just start piling in. And you don't want that if the bull market is to continue. And another way to gauge the sentiment is just like talk to your friends. Like for me, when I talk to my friends, a lot of them are telling me that they're out of this market. They are 50% in cash. They're saying, I don't like this market. I don't like the economy. I don't think anything's stable. I think Trump is crazy. I don't want my money in there. But realistically, if they have their money out, they're missing out on a lot of gains, right? And the market is doing really well. But that's a good signal that, there's more room in this bull market. I would be more concerned if they're like, oh yeah, I got everything in the market. I took out a second mortgage and put that money in the market too. Then that's the euphoria froth you got to look out for. But based off these sentiment charts and just my own friends, I know that, sentiment is not that high yet. People aren't that positive. And that's why it's nice when you are in the market and taking advantage of that. Take advantage of all these gains. And that's what we're doing with the NASDAQ All-Stars right now. It's a pure equity strategy, so we're earning from all these stocks that just keep going higher. It's momentum based, so we're always staying in the fastest movers and those that are gaining the most. And the best part is that it's not just buy and hold. We have a lot of risk control in place, position management, all that stuff that really matters, that really affects your returns. And like the most important part, when the market does turn, we'll be out, so we'll be able to hold on to these gains versus the other guy who's just buying and holding, and he'll go down with the market as well. But anyways, this is only open until Sunday at midnight, so if you're interested in checking it out, then definitely do it before then. Like I was saying before, I haven't opened this up in months, and the next time I open up access will probably be in the summer, which is more than 6 months. So I would say definitely don't miss out if this is a system that interests you, which it should, because it's great. I'm going to put a link down below in the description and comments that will take you to another video that will explain more about this system, and then on that video you'll have a chance to go check out the page where you can learn more again. I want to make sure you know what this system entails. Anyways, definitely check out this system, and if you haven't already, subscribe to this channel and hit that notification bell for email notifications when we release new videos. We do videos all about the stock market, personal finance, business, stuff like that. So subscribe, and I will see you in the next video. Stay fallible out there. Bye.